Something really strange is happening in the real estate market right now, the likes of which we haven't seen since the 1990s housing crash. But this could actually create one of the best opportunities that we've seen for real estate investment in Canada since that last housing crash. During the 1990s, a lot of sellers were offering to finance the properties that they were selling using something called the seller take back mortgage, vendor take back mortgage, or seller financing. And I would consider the VTB one of the four key financing mechanisms that you're going to need as a real estate investor or real estate professional in 2025, all of which we're going to be covering at our upcoming event called Navigating Capital. It's at University of Toronto. It's presented in partnership with CMHC, whose chief economist is actually going to be doing a market update at the event. In addition to my presentation about vendor take-back mortgages, we're also going to talk about CMHC's MLI Select program with Build Financial and Peak Hill Capital. We're also going to talk about private construction financing with one of Toronto's leading private construction lenders, Foremost Financial. And we're also working on a panelist who's going to talk specifically about the government's new secondary suite loan program and how to refinance up to 90% of $2 million if you're adding suites to your primary residence. Those are my four key financing tools that real estate investors and professionals need heading into 2025. So if you want to learn more about them, click the link below to get an early bird ticket for this event. It's happening on April 1st at University of Toronto. Now, to dive in a little bit further on the VTBs here, if I go on the Toronto Real Estate Board and I search in the remarks for brokers category by VTB or vendor take or seller financing, I can see here I've got over 300 listings in the GTA. If I zoom out a little bit further, I can get over 330 listings on the Toronto Real Estate Board across Ontario that are offering seller financing of some type. There are hundreds of these deals of all different shapes and sizes. You'll see a lot of land, a lot of commercial property, but you will see residential opportunities as well. So what is actually causing this trend? From my perspective, sellers are getting creative because there's a lot of listings and not a lot of buyers in today's market, and you need to be creative if you want to get a transaction done. We saw this take place in the 90s as well. The banks were often the ones obstructing the deals. And this is a similar phenomenon to what's taking place today. Even though rates are coming down, banks are getting more scared. They're starting to see risk in the market. And that causes something called a capital contraction, which means that they're less and less likely to want to lend. And so if capital or the bank is the only thing standing in the way of the deal, a seller can often remove that friction by becoming the bank. VTBs can be a game changer for real estate investors and for realtors negotiating their client for three key reasons. Number one, they introduce a completely new lever into the negotiation process. Before, you just had a price, closing, deposit, conditions. Now you have a loan amount that can go up or down, and you have an interest rate that can go up or down. You can also play with things like the term, the amortization, etc. So it gives you a lot more levers to negotiate a good deal into place for your client or for yourself if you're making an investment. Number two is a VTB is typically significantly less cumbersome to qualify for than traditional financing. In fact, you can almost add that to the negotiability of the deal, because if the seller really believes in the value of the property, then they should be willing to lend against the value of the property because it's the security in the loan. If you stop paying, they have to take that property back. As long as they believe it's worth what you paid for it, they shouldn't be too concerned about the security of the loan. And finally, a VTB can actually offer the seller savings on their capital gains through something called the capital gains reserve. Now, I'm a realtor, I'm not an accountant, and so this is something you'd want to talk to your accountant or have the seller talk to their accountant about to get a better understanding of whether or not this is something they can actually do. You can find a lot of information about the capital gains reserve on the Government of Canada website, as well as the wealth management offices from most of the big six banks in Canada. Honestly, I think the capital gains piece is one of the biggest components, simply because I've met so many real estate investors who absolutely hate the idea of paying capital gains. And if you tell them that they can save some sort of capital gain from giving you a vendor take back mortgage, they are probably likely to at least be intrigued. Now, before you jump into looking at VTB mortgages, and we've built an awesome tool on our website at valerie.ca where you can actually sign up to receive vendor take back listings as they come available on the MLS, there's a couple of things that you need to consider. Number one is that when you're getting into a vendor take back mortgage, it eventually contemplates a private mortgage term sheet. And so you really need to know what you're negotiating and signing as a seller or a real estate professional. And you want to have key people on your team like a lawyer or a mortgage broker who have experience with these things. And honestly, there's probably too much to cover in one single video. If you want to learn more about vendor take back mortgages, I'm going to be doing a 10-minute presentation on this at our Navigating Capital event. This is just one of the 4 key financing strategies that'll be presented at this event. The other 3 being CMHC's MLI Select financing, using private construction financing, especially for multiplex projects, and the secondary suite loan program and owner-occupied refinancing of multiplexes, which has honestly been really, really hard for us to come by information on this. And we've actually had to go and seek out a speaker who is currently researching it to be able to bring enough to the event to present on. So again, April 1st, University of Toronto. Hope to see you there.